What are they building?
Hello, Hussein. How are you doing? Hello, is the audio clear?
Yes, I can hear you.
Okay.
I'm
just trying to test the microphone to see that the internet is not giving me issues today.
Okay, sir.
All right. Yeah. So we'll be starting off immediately. I'm sure that we have our mentees, our mentors as well, and every other person on board. And my hope basically is that today will be a very exceptional day for each and every one of us, so that we can have the best of our mentors like we did. In fact, people are talking about week 3, week 4. I know that week 5 will be more explosive than the other weeks. So very quickly, I would like to welcome each and every one of us to week 5 of the JIIPCC Mentorship and Internship program for Fintech. We've had a very beautiful start for Q3 in the Fintech program, and I'm sure that today's session will be beautiful as well. I want to welcome you all once again. So very quickly, my name is Obo Joseph. I'm a mentor / moderator for the JIIPCC Mentorship and Internship program. I hold my master's in ICT and telecommunications law, several courses across public sector management, tech-related courses, basically across several parts of the world. I don't want to bore us with all of that information, but my bio is here. So once more, I'm happy to introduce today's session once more. So very quickly, we'll be moving straight to introducing the program. I'm happy. In fact, I want to say a very big thank you to all the mentees that have taken their time out to ensure that they post about JIIPCC, they talk about JIIPCC, they ensure that JIIPCC is actually gaining the kind of ground that we need to in the social space. We couldn't have done that without your own impact and input. Thank you very much. So about the program, the Mentorship and Internship program for Fintech is a quarterly mentorship program for students and young professionals across Africa. Hopefully, we would really reach Africa, all the nooks and crannies. Yeah. So the program definitely affords mentees the opportunity to access valuable advice, training, networking, mentorship, internship, discussion forums, industry updates, resource materials from experienced mentors. As you have seen throughout the program, we've actually been able to keep to this very well. And also we hope to encourage that young professionals, students and the likes take an interest in continuous training, development, and of course across Africa and in Nigeria as well. So I would like you guys to when posting about us, just you can hashtag JIIPCC Mentorship and Internship program. So the announcements, basically, I would quickly take the announcements, and my hope is that for the registration for Q4 for the JIIPCC Mentorship program across all the mentorship areas is actually on. Our hope also is that you can request and access 30 minutes of private mentorship with mentors that you would like to speak with. In fact, on the Fintech program, some of the mentors are actually open to engaging with us. So I would personally like to see many of us trying to engage with the mentors that we actually have. You're also encouraged to put on your videos. We are actually streaming live, just so you know. I would like to encourage us to edit the name section. I think most of us have actually done that already. Thank you so very much. And do not forget the registration for the JIIPCC end of year party taking place in Abuja. I can't wait for that, 10th December. So right now, I would like to read out the mentors profiles. Once we do that, I'm sure that group 1 is actually getting ready. I would like to quickly read out the mentors profile. If we can have that, Mr. Hussein, if you don't mind. Thank you so very much. But while I'm waiting for that, okay, yes. Today is Babatunde Olofin Day on the Fintech program. Thank you so much, sir. So Babatunde Olofin is the Vice President, Cards and Payroll at Team Apt Limited, Nigeria. He has 18 years of experience helping top financial institutions grow businesses through innovation and appropriate technologies. Babatunde's expertise is in driving business strategies and growth within technology, and he is responsible for cards and payroll business growth at Team Apt Limited. He's an accomplished leader and business executor. We are so excited to have you today, Mr. Babatunde. You're very welcome. So I would take the second profile for our second mentee. She might necessarily not need so much of an introduction because we've had her before on this program and it was really explosive. Damilola, nice to have you once more. Quickly, Damilola Akinayejo holds a BSc degree in microbiology from Osun State University. Over the last 8 years, she has garnered experience in customer experience management, product development, product management, and digital partnerships in the banking industry. She currently works with Providus Bank as a Fintech partnership manager, where she enables partnerships with Fintech, microfinance banks, SMEs for digital financial services and products. She is also an entrepreneur with 2 startups as an events manager, an events management company, Zapris Events, and a spice production company, Spices by Asabi. You're very welcome once again, Damilola. Nice to see you once more. So very quickly, we are moving straight. As you can see, the tempo is high. I can't wait to have the presentations so that we can all also learn from what our mentees are actually doing. So I'll be calling on Group 1. Group 1, if you don't mind, you can fill us in to what you have for us today. The floor is yours. Thank you so very much. You're welcome, everyone, once more. Thank you. Do we have Group 1 ready?
The presenter for Group 1 is Olushola Oyeyemi.
Good morning. My name is Joy. I'm presenter for Group 1. I'm trying to share my screen. I'm sorry, I'm unable to access the document, so that's why. Okay. So please, can you see my screen? Hello, please, can you see the screen?
We can see your screen. You can go ahead. Thank you.
Okay, thank you. So hello everyone, good morning. My name is Joy Ilobun and I'm the presenter for Group 1. So our topic today is Fintech business models. And I'll start with the introduction. Fintech, as we already know, is termed to be the fusion of finance and technology together. And even though it is not a new innovation, it has been a little bit novel in our Nigerian space, as it has not evolved rapidly since its emergence. And then, but of recent, it has received a lot of attention, and this is because of the challenges associated with the traditional banking models. And that is why a new means have been brought forward in incorporating finance into tech to make it easier for customers to have good financial transactions. So in defining fintech business models, first of all, I'll begin with defining a business model. So a business model can be seen to be the framework for figuring out a methodical strategy to create long-term value for a company. So it's just like a comprehensive framework for someone to understand how to provide value to the customers and also how to monetize the value that provided to the customers. Now, a fintech business model, however, is a plan that is made for a financial technology business. It includes the operation strategy, strategy for revenue, and the customer base that the particular fintech platform will be rendering. And then fintech business models uses technology to improve financial services in the financial industry. So there are different factors that fintech startups would take into consideration before choosing a business model. And one of the things would be the startup goals. The particular fintech company, in choosing the particular model, will have to look at the goals that the company stands for to know whether that particular fintech business model will be suitable for their particular establishment. Another thing they will also look at is the specific audience. They'll look at their target audience. Different fintech companies have different specific customer base that they are tailored to. So they will have to look at their specific audience for them to determine whether that particular fintech platform, for them to determine whether that particular fintech business model will be suitable for them or not. They also look at key partners in their in choosing a good fintech platform. They will look at their means of investment, how they will also get revenue and resources for their establishment. They will also need to look at their consumer demand, which is a very key factor in choosing a suitable business model. So there are different types of business models that fintech companies can incorporate into their establishments. I'll list them and I'll explain some. So firstly, we have digital banking. We also have alternative credit scoring. We have alternative insurance underwriting. We have insurtech. We have transaction delivery, peer-to-peer lending, payment gateways, digital wallets, asset management, and so on. So I'll just go ahead to explain some of them that I mentioned because of restraint of time. So the first one I'll be explaining will be digital banking. So different banks offer individual and business bank accounts using complete digital infrastructures. However, this digital banking model is almost the same way with that of the traditional banking model as applicable in our traditional banks, but just that this particular one, digital banking models, require little manpower, high cost for manpower. Will not require high cost for manpower, and then the factor of real estate, which is physical branches, will not be an issue. For example, we have Kuda Bank. Our Kuda Bank is a digital banking platform. I don't think they have a physical building. So it helps, it's easier that way. Another fintech business model will be alternative credit scoring. Alternative credit scoring helps to losing the strict credit scoring that's provided by traditional banks. So it therefore increases the chances for self-employed people to take loans. And this is one of the fintech business models that a fintech company can embrace. Another one will be alternative insurance underwriting. Fintech companies will be able to decide whether to give insurance or not based on the terms and conditions that were provided by them. And then these alternative payment options will be combined with AI algorithms, with lifestyle data and medical history of their customers. This is also a model that a fintech company can incorporate into their establishment. We also have others like insurtech, payment gateways, asset management, API-based bank as services, and so on. I'll go ahead to explain how fintech companies make their money. That's how they generate resources for their establishments. So in the early years of most fintech startups, they usually focus on growth, which is for them to be able to make more profits. And then fintech companies make profit by budgeting and money management. They make profit by crowdfunding. They make profits through the means of cryptocurrency, which is very rampant now which has been very rampant actually in recent times. They make profits through lending, subscription and fees, robo-advertising, and API as revenue stream. So in conclusion, we say that the fintech industry is popular among a lot of consumers, especially places with advanced technology. And due to the nature of technology, which changes from time to time, it's important for fintech companies to adopt the change, for them to be able to, for it to reflect in their particular establishments. And then fintech startups will also have to keep up with the trends in financial services so as to be able to meet with customers' requirements, and then help in the simplification of payment transactions, which is really what fintech companies are known for. So without further ado, I've come to the end of my.
Yeah, thank you so much, Joy. I enjoyed your presentation. One of the things I can say before we call Group 2 to come on board is that it was very quick, it was sharp, and it was straight to the point. So thank you so very much, Joy. So very quickly, would like to have the presenter from Group 2. If you're here, you can take the floor right away. Thank you so very much.
Thank you. Good afternoon, everyone. I'll share my screen very quick. Just 1 second, I'm coming. So. Can anybody see my screen? Hello, can anyone hear me?
I can't see your screen yet.
Oh, okay. Okay, good afternoon, everyone. My name is Olushola. I'm presenting for Group 2. Okay, so we'll be speaking about tech profits model and sector spread. So I will start short and very quickly. So introduction, fintech organizations generally adopt inclusive approaches to finance, enabling customers to have apt access to a wide range of financial services and products. These services and products are mostly available across mobile devices and don't require a convoluted sign-up process. A fintech profit model is a plan. So definition, a fintech profit model is a plan for a financial technology business, which includes operating strategy, revenue sources, and intended customer base. Factors affecting startup goals, specific audience, business processes, key partners, and consumers demand determine the suitable profit models for a fintech startup. So we'll look shortly at the various fintech sectors and how they make profit. So firstly, we're looking at the payment and billing software. Money transfers, utility bills, etc. can now be sorted with a single click. This is possible with a payment billing software. Payment billing software. Payment software allows customers pay for any commodity or make money transfers online using credit cards or their bank accounts. Another fintech sector is digital banking. So how digital banking, how they make money is use of applications designed to make financial transactions easier, manageable, convenient, and accessible via smartphones online. Now, these applications consist of an integrated system that allows clients to make transactions from different devices without using a physical bank branch. We are conversant with this, our regular mobile bank apps. Okay, so digital banking provides both the personal finance and the business bank account for the client, making it possible to manage the funds. Peer-to-peer lending, because this concept involves this concept connects individuals who want to borrow with individuals looking to invest. To help borrowers and lenders connect, websites have been created that matches the two parties to make financial transactions more efficient. It is beneficial to both parties. Banks and other financial institutions get a new way to make money, and borrowers get access to better loan terms than ever before. Another fintech sector is crowdfunding. The growth of social media and the internet is a crucial factor in crowdfunding. We know this, from even the NSAS strike that happened in 2020. Most of the funds that the proponents of the strike got were from crowdfunding, basically from Twitter. So social media, yes, and the internet is a crucial factor in crowdfunding. It is now simpler than ever. Crowdfunding involves raising funds for initiatives or financial organizations. Smaller sums of money are collected from a large audience to help funds or to help for the project or a product or a project. Investment. A lot of investors prefer investing via online investment platforms as they don't have to pay trading fee. Although the price investors pay for stocks is slightly higher than the stock's actual price, the amount they save is significantly higher than the trading fee they paid via conventional means. The regulations guiding fintech profit models. The major regulator, of course, is the CBN. The CBN means the Central Bank of Nigeria, and it exercises power under the CBN Act of 2007. It is the main body in charge of matters concerning the fintech profit models. Now, other regulations are the CBN guidelines, of course, for licensing and regulation of TSBs in Nigeria. The banking and other financial institutions, as that's the BOFIA of 2020. Ways that fintech has made payments very accessible. We have increases productivity, preserves capital, security and fraud prevention, alternative lending solutions, mobile banking solutions. In conclusion, as the fintech market explodes, we get to see some of the early innovators in the field. With the help of profit models, fintech companies will keep coming up with new ideas that will increase cash flow for the organization and make people's life better, thanks to the combination of finance and technology. Also, in a bid to make more profits, fintechs should ensure that the platform is not used for money laundering and all other associated vices. This is why we have the money laundering act. Thank you for listening.
Thank you so very much for that presentation. It's like there's a competition in that, like, everybody's trying to be as quick as possible. One thing I would say before I let our mentors make their comments, basically, is in making presentations, the beauty of a presentation is that you actually understand the presentation. It's not in the reading of the presentation, it's basically in the explanation of it to an extent. So, for example, maybe you take a line one, you already understand your presentation, so you try and flesh in that line out without necessarily reading what you have written maybe 100% of the time. So I just wanted to add that as an aside. So very quickly, I would like to welcome, we've already read our mentors' profiles. So I would like to welcome Damilola to give her comments. You're very welcome, Ma. Thank you so much.
Hi, good afternoon, everyone. Nice to be here again. Can you hear me? Yeah, I think I'm audible. Okay, all right, that's cool. Thank you, Joseph. I think I will just start with your last comment, and I had already noted that in my book as well, that I noticed that they were literally reading the presentation verbatim and not necessarily talking us through their points. So I think this is also a feedback for them that in the future, when they're making PowerPoint presentation, the slides are not necessarily, I mean, it doesn't necessarily have to be wordy. Just give us some bullet points, maybe a few images to depict what you're saying. If it's something that has to do with a process, you can do flow charts and all of that. Then by understanding the presentation, then you can just talk your audience through what you're trying to say. Good attempt by both groups. I think there was something that caught my attention in the presentation of group 2, which I wanted to also mention to the group 1 presenter, that in terms of defining what a business model is, there are 3 things that, I think about 4 things that needs to be considered. One, when a fintech is defining what their business model is, the first thing is how to acquire customers. how to acquire customers for whatever idea that they have in their head. A fintech doesn't just start by doesn't just drop from the sky. It's always one or two persons or a group of people that have come together to see that there's a problem somewhere and we need to solve this problem by doing this. If you go back to the history of how some of this fintech started, if you go through the story of how interest rates started, the story of how Paystack started. If you hear Shola and Nashua talk about it, I mean, there were just two young students university students and thinking about it that can make this thing work. So it's always a problem somewhere and somebody's trying to identify how to solve the problem. So the first thing is how to acquire customers. Then the next thing will now be how to get money, how to get revenue from that idea that's in your head, how to convert it into money that you can also earn from, even as a CEO or whatever. Then the next thing will now be, I think before the revenue, then the operating strategy. There has to be a strategy on how you would operate. You can't just use a strategy for Monday and use a different one for Tuesday or for this year and a different year. So you see that from start to finish, even till now, Kuda Bank is still reiterating that they are a full service digital bank. And you have some other fintechs as well who are doing offline banking and offline digital banking, and they are still maintaining that. So operating strategy is something that is very important when identifying business model for a particular fintech business. So thank you to both two for that. I think what I would also want to add is apart from making money, which you would eventually want to do, I mean, as a business person, which you want to do as a business person at the end of the day. But the first thing you want to do is to solve a problem. The last thing that will be on your mind is how to make money, how to get all the millions, how to be on the Forbes 30 under 30 and all the likes. The first thing that comes to your mind when you're developing your fintech is, how am I going to solve a problem? So the problem can be that you want to be able to lift a building up by 4 pillars. What you need to now think about is how to ensure that the building has balance. There's no friction, there's, I don't know, I'm not an engineer, but you understand what I'm trying to say. So what you need to do is to figure out how to solve the problem. And you find that many of the fintechs that we have today, they are literally solving a problem. Kuda is solving the problem of people who do not want to be physically present in a bank, in a traditional banking hall to do anything. They just want from the comfort of their home to do a transaction. I mean, and if you look at it really, what do we really do in a banking hall? If not to make payments or to do over-the-counter withdrawal or to log our complaints or to request for card services, and all of this can be done just by the comfort from the comfort of your home, which is what Kuda has replicated to us. And of course, what else do you think that people really have problems with again? Maybe payments. You want to simplify payments by digital payment, by payment gateway services, USSD transfers, QR technology, and all of that. So, as a fintech startup, these are things that you consider. And for me to be able to solve this problem, what payment method do I want? Am I going to be using payment gateway services? Do I need payment links? Am I going to integrate to any social platform? Am I going to need to maybe ride on a particular person's platform and be an aggregator, a super agent? So there are 1,000,001 opportunities and models that you can use to be able to do that. While you're also putting your fintech model together, you should also, like we said in the last session, put regulation in consideration, because everything that you do, especially when it has to do with keeping people's money, passing people's, collecting people's data, and people are storing their payment information on the platform, or they are making payments with a debit card, and by any reason whatsoever, the card details is saved on your platform. You need to plan on how to answer the question when the regulator is asking that what cover do you have for people who have vulnerably left their card details on your platform? Is there protection for them? Are their card details saved, and all of that? So fintech business model is a very holistic process before you start up. This would help you get to the market on time, help you identify your customers, help you segment the market that you want to get into. Like the first group mentioned, I think was the first group where they highlighted the different models, P2P, the issue tech, neobank, digital banks, and all of that. So also identify the segment that you want to play in and how you intend to solve the problem of that sector. Then helps you define what your strategy is, how to go to market, how to identify your customers, and of course, at the end of the day, how to make money, because that's what we all want to do at the end of the day, make money. Thank you.
Thank you very much, Ms. Dami Lola. Thank you. I think Mr. Joseph's network is unstable currently. So we'll call on the next mentor to give his comments and contribution, Mr. Babatunde Olofi. Please, Mr. Babatunde.
Hi, am I audible?
Yes, you're audible.
Oh, great. Good afternoon, everyone. And thanks for having me here. Why the presentation started, I looked back at the invite I got and I understood that some of the presenters are young people in the industry. So I started dancing. I said, wow, okay. We are beginning to have people that have not only showed interest in the fintech line of business, but that have also started doing research and beginning to understand how this industry works, right? I mean, especially in the business model side of things, it is really dominated by people from the Western world who comes into a fintech and try to either buy into the fintech in Nigeria or help in some way and earn some, ridiculous amounts as consultants, right? So this brings some kind of joy to me that we already have people that have shown interest and are beginning, let me put it like practice. Never mind my video. Some of us work from home all the time, so we look funny in the afternoon, in the morning and afternoon, until we want to step out of the house. So please pardon what you are seeing now. Okay. So I mean, Damilola has made it extremely difficult for me, to be honest. She has said almost everything, right? But not to re-echo what she has said. I've pitched some points, which is part of the things I would just want to add to what Damilola has said. In terms of the presentation, I mean, she had killed it. She's explained you don't read your presentations. As a matter of fact, as a fintech business person, when you are pitching to investors, they give you 30 seconds to pitch. 30 seconds to pitch, 3 minutes for the demo of your product. And in everything, that means you have 3 minutes, 30 seconds to impress investors, whether they are going to invest into you or not, right? Because you will have lineup of fintechs and presenting to the same number of investors. And you just have everything you have to do. I mean, I've done this severally. You just have 3 minutes, 30 seconds. You talk about everything. So you cannot afford to read through slides. It is impossible because you will never get to what they want to hear before they tell you time up. So show us your product, right? So let's leave that aside, as Damilola said. Now, there is something I keep hearing or that I heard in both presentations, more or less like fintech is around financial services alone, right? Yeah, forget about the name. I mean, the name came from technology, finance and technology, right? And a lot of fintechs that had come up had been around financial solutions, payments, digital savings, neobanks, and the likes, insurtech and everything. But we are beginning to have fintech going into other spaces. Now we have fintech in real estate, right? Where they do fund crowding, put it together, build estate and sell to give return to investors, right? We are beginning to have fintechs going into space like, agriculture. We have them in haulage, right? We have fintechs in logistic business, GoCada. So first, I just want to try to, shift that mindset a bit, nudge it a bit, that it's not only in financial sector, so that we don't keep our minds around financial sector and say, oh, if I want to do something innovative, it has to be in the financial sector. You can look for any sector that there is a problem, solve that problem, and you are already making money, right? And I like the way Damilola put it. Put the money behind you. Forget about the money, right? You don't chase money in fintech. Money chases you when you solve those problems. You don't solve problems without making money. It is impossible. I've never seen one, right? Where I work, we have an advert that says village people are not after you, right? You must bank with the right bank. Let me do some adverts more before Damilola. Damilola is smiling. So when you solve a problem, right, you will definitely make money. So put the money behind you. Now let's go back to what fintech model is. Again, fintech model is not about the sector. Damilola hit that as well, because I keep hearing more of the sector, talking about payments, talking about as the business model. That's not the business model. Those are the sectors that you decide to play in. Business model itself is just around the things that you guys have talked about. It's around the strategy, it's around your customer, who are your target customer, and it's also around the revenues you are chasing, right? How do you make this money? And I'm going to just make some few points, right? I will just talk about 5 to 6 or 7 things that you should take a look at in your business model, right? Remember that we have put everything together in 3 things: the customers you are targeting, the operational modules, and your recurring revenue, or how you make money on your revenue. Now, in your strategy, the first thing that comes was what Damilola said. There must be a problem. You must be solving a problem. Don't start a company without a problem in mind. If there's no problem, please don't run a fintech, right? Because there's nothing you will be doing, to be honest. And that's why a lot of company fails today. Why will I want to go and, for example, start an online payment gateway or an online payment company when I'm not going to beat the likes of Flutterwaves and Paystack? There must be a problem that those guys have left behind that they are not solving, that I'm coming to solve. Otherwise, they have already gained the traction. There is no way you can catch up, because they have the investment, they have the infrastructure, they have the money for marketing, they have everything. So you can't catch up. So there must be a problem. There must be a niche. There must be something lacking that you need to target quickly, right? And that is the problem you will be solving. Then when you have the problem, then you cannot start thinking of solution. How do I solve it? And by the way, there are 3 things that you must note in any business to scale, right? If you are defining solution, your solution must be accessible, must be available, and must be affordable. If any of these 3 things is missing, right, you have not started. Then you must go back to your solution and rethink your solution again, right? And when I say affordable, for example, if I'm doing payment, Paystack is already there in online payment. Flutterwave is already there in online payment, right? If I'm talking about offline payment, you have Money Point, you have First Money, you have OP already dominating those space, right? So there must be something you have to solve. Either you are solving the problem of affordability. Maybe your solution makes payment cheaper, right? That is affordability. Accessible means that the solution is accessible everywhere. I don't have to go far to have access to that solution, right? And your solution must be available. You can't have a platform that keeps going down every 5 minutes. Then it is not available. So, but when you have the combination of those 3 things, you are in business. Mind you, you are actually solving a problem, but while solving that problem, these 3 major things must be at the top of your mind, right? So there is the problem, There's a solution, and in your solution, you must have a unique proposition. Something must distinguish you. It must give you an unfair advantage. That's what we call it. It has to be an advantage that it is not easily copied by the competitors. You must be there. You know that before they copy it, you have gone another step. All right. Then you must be clear with your customer segments. Most times I laugh when a startup that is just starting today is saying, I'm a B to C. Then I wonder. I said that, come on, guys. I mean, putting it together, you are a B, you are a business, you are serving some businesses, and you're also serving consumers at the same time, and you just started yesterday. How do you want to get the traction? You must have a particular target customer first, kill and dominate that environment. Then you can now move to the next one. So if I provide a core banking solution, for example, right, stay with that core banking solution. Give the solution to businesses, give it to a microfinance bank, give it to lenders, let them use it. Then when you dominate that environment, you can now think of, oh, how do I expand? Okay, let me layer like another module on this thing that can do AI lending, such that I can help these businesses to do automatic credit scoring. So at that point, you are now moving gradually to the C, the consumer part of things, but still helping the business. Your strategy must be clear. It's either you are a B2B or you are a B2C. Except you have dominated the B2B, you cannot do a B2B2C. But you just started yesterday, B2B2C. Believe me, you won't go anywhere. Right? So that's another thing. Then you must have clear key metrics. You must be able to measure yourself. In 3 months, this is where I want to be. In 6 months, this is where I want to be. Those are part of the strategy you have in business model. Remember, I said business model are 3 things. You have your target customer, you have your business, you have your strategy, then you have your revenue, right? Everything I've talked about is more around the strategy. Damilola has skilled customer. There is nothing. The only thing I just added to the customer is to make sure your customer is a particular customer. If it's a B, let it be a B. If it's a C, let it be a C. When you dominate an environment, then you can now move to C. If you are a B, or wherever you want to move to, right? So there must be clear metrics. You must measure yourself, right? There must be channel. You must know the channel you want to use. Flutterwave today, they can acquire any transaction, but trust me, they just hang on the online transaction. They are not setting up agency everywhere to do offline transaction acquisition. It's not that they can't do it. It's the same infrastructure. But they decided to, look, this is where we want to play and dominate it and kill it. And that was what they did with Paystack. Online acquisition. Why you have the likes of MoneyPoint, the likes of First Money, the likes of OPay doing the offline acquisition. So everybody dominated their market. It's the same infrastructure. They are all acquiring payments, right? If you can acquire online, you can acquire offline, right? But the most important thing is that they know if you attempt to start acquiring everywhere offline, you will be distracted and you will never dominate any of the environment. Then your channel must be very clear. You must know the channel you want to use. If you want to use mobile, use mobile. If you want to use USSD, yes, you can combine some channels, but you must have some, you must have a structure. Sorry, that's my dog. So, apologies, that's my dog. Go, come. Yeah, keeps making noise. Then your cost structure must be very clear. Please do not use 10 million naira to acquire a business of 500,000 naira. It is not innovative in any manner. The essence of you being a fintech is that you must create a cheaper business, right? And that's one of them. The final one that I want to talk about is your revenue stream. It has to be clear. You must know what you want to achieve. You must know the amount you want to make from a particular. So if you put all these things together, then your strategy is clean, your target customer is clean, and your recurring revenue is clean. Don't forget, fintech is about technology and the business. So you build a technology infrastructure, then you keep sweating that infrastructure continuously and making recurring revenue on it. And that's why if you're a fintech and you are looking for investment, the first thing your investors will ask you, or your potential investor will ask you, what's your MRR? What's your monthly recurring revenue, right? Because it has to be recurring on that infrastructure you have built. And over time, that is when you make the money and you become profitable as a fintech. Thank you, guys.
Wow. Thank you so very much, Mr. Babatunde. Damilola, thanks a lot as well. This has been like a huge lecture. We can almost package this thing into a masterclass or a course online for people to begin to pay money for. Thank you so much. I want to say I've been blessed by both your comments, and for me, it's like I'm in school again, and I really enjoyed both comments. So we would like to quickly take we call this picture time so that we can just document everyone who is here. So I would like to appeal to all the mentees and everyone, please kindly put your videos on. Let's just quickly take a screenshot. Joy, can you help us out with your video? Emmanuel, Miriam, so we can quickly do the screenshot, then we can move straight to Q&A. All right. I guess maybe we might be having a scenario where Miriam, Emmanuel, and Joy might not be able to put their screens on. So very quickly, we'll just quickly take the screenshot for those of us who have our videos on. All right then. I'm hoping that before the end of the session, we would have everyone with their videos on so that we can actually do the screenshots. So very quickly, I would want us to move straight to the Q&A, to the questions. We have 3 questions here that are actually here. I have like 2 other ones to add. I believe that this is one of the areas wherein much of the things that we did not envisage would be dealt with. So the first question would go to Mr. Babatunde. Damilola can also provide her views as well on question 1. Maybe, yeah, on question 1. So the question is, how does regulation ensure that profit making of fintech using additional cost on transactions are regulated? Is there a way that the CBN is regulating cost of transactions by fintech companies?
Yes, I mean, today you can't even operate as a fintech without having a regulated license. Either you get something from CBN or you get something from Lagos State. I mean, Lagos State is, I mean, it's also part of government anyway. Or you get something from NCC. So, I mean, you will definitely have something. So, and what that means is that once you are registered, you are also regulated, right? Today, fintech is not as regulated as the banks, right? Because a whole lot of fintechs don't hold deposits. So the deposits are with the banks, but they facilitate the processes of all these transactions, but the real money sits with the banks. And there are ways that those accounts are monitored in the banks. Once there is huge amount in a particular account, I mean, Damilola is a respected banker, so she will explain more on that. She'll put some explanation on that. There are reports we call like NFIU reports, and some report that goes to CBN on a daily basis, monthly basis, quarterly and yearly, that CBN checks. And they see the transactions in all of these accounts, and they question, what does this company do? What is this? What's the license of this company? Through that process, it may not be directly regulated, but behind it is somehow regulated. They see these transactions and they check them. Although naturally, by nature, fintechs try to hedge banks in terms of transaction, and the way they do it is that they create affordable solutions, right, which is more affordable than the banks. So you find out that from that process, by nature, they are cheaper in terms of transactions compared to banks, right? And because their infrastructures are very light, right, their cost of operations, especially their cost to income ratio, is very low, right? And they're able to serve properly. So regulated, yes, they are regulated, but by nature, it's just like being self-aware, right? They are always cheaper in any way. So that's why you won't hear more of regulatory, slamming them and say you are charging too much, because by way of doing things, that is the one of the problems they try solving.
All right. Thank you so very much, Mr. Babatunde. Damilola, I don't know if you have a response to question 1 before we move to question 2.
Yeah, I think I'd just like to add, in addition to what you said, I think I pretty much answered the question correctly. But in addition to what you said, too, I think Sabatiste will also be a weakness. Competition also drives costing of the fees. I remembered when OP started and OP was doing, I think it was OP that actually started. OP was doing same-day settlement or real-time settlement, and everybody went mad. Like, what? So there was a high exit for many fintechs then, and was like, how can we do this? But really, OP had a lot of funding when they started. Investors were really big on getting the entire chunk of the Nigerian market, so they had monies to play with, and they were like, any bank that wanted deposits to support their settlements, just give it to them. Let them be setting our merchant rates and let them be setting our merchant rates. And so I think apart from the regulation, who literally do not even have any pressure on the fintechs, competition also drives the costing, because I mean, when you're coming out, you want to maybe not compete with the big people, but at least just make sure that when your customer is not pleased with the big people, they have an option of coming to you and say, oh yeah, I can actually try them. Their cost of their fees are not as expensive. So let me just give it a shot. So that's it. Thank you.
Yeah, thank you so very much, Damilola, for the response. I would like to skip question 2 for now, and I know that there's going to be a whole lot of value in looking at question 3, and I would also like a dual response as well. Question 3 is, please, can you give practical examples of a business model and how it is applied? Maybe bridging that with failed business models of fintechs that have come and have also exited the market space, so that we can at least have a balanced view as to how a good business model can affect a company, and also how a terrible business model can also affect a fintech company. So, Mr. Babatunde, if you can go first. Thank you.
Okay. Let me, and I like the way you put it. Yeah, let's compare a bad business model and a good one that made some the ones that have made business fail. And I'm going to be very practical, and I'm going to make myself an example. I had a business that failed in 2017. I launched it in 2017. The business didn't survive 6 months and it failed. And I'll just tell you about it. The problem I was solving actually exists, right? But the solution I was trying to use to solve the problem, okay, wasn't market fit. And I will explain it. I noticed, so I had a problem one day. I was very broke, and I needed money. So I needed to sell something, and I couldn't sell it. And I was like, look, there is somebody somewhere that needs this thing that I want to sell. And there is somebody somewhere that also have what I need this money for. Why should I first of all go and sell, get money out of it, and go and buy? Why do I have to do 2 hurdles? So why can't we have a solution that can allow people to swap things, right? Value the 2 things, swap it, right? And if one value is more, then you augment it with balance of money or something. I Googled, I searched everywhere. The only country where there was barter, where you trade things and you value it, and you have a company in between the 2 of you and make you swap and stuff, happens to be in the US. So I felt, Eureka. This is money for me, right? So I thought of the money first. I wasn't thinking about the solution. So I jumped into it. Guys, let's build. We built. We developed. We launched this. I still have the video. It was launched in Sheraton. I had 10 pressmen came around. Everywhere filled with friends and families. They ate my food, drank my drink, everything. Took pictures with me, shook my hand. I was happy. I'm in business, right? Then boom, Gigi started adverts. Sell your stuff. sell this one. Now, immediately, I knew what I did was not market fit, because people now preferred to sell and have their cash in their hands and go and buy what they wanted. 6 months down the line, I didn't have more than 2 people that did swap on my platform. So I knew it was a failed business model. Right. Now let's come back to reality. What failed in that particular side of things is the strategy. Right? Remember, we said business model is around 3 things. Damilola mentioned customer clearly, so I'm not going to talk about customer. Customer, right? You have your strategy, your operational strategy, and you now have your revenue. So at that point, it was a bad strategy. The customers were there. I mean, everybody were buying things on Gigi. So the customers were there. People need to sell something. And of course, when they get the money, they don't just keep it. They spend the money to acquire something else, right? So the customers were there. But the model that I went for was totally wrong. So it wasn't market fit because I didn't do market survey to be sure that this is what, or this is how the potential customers actually want to sell things or exchange things, right? And it failed in 6 months, no story. I was only smart enough to know that it has failed, and I stopped investing into it, and I quickly got out of it. Why? Some people will still say, no, I need more adverts, I need digital marketing, and they will keep spending money into it and start fighting a failed business. If it's failed, it has failed. Put $1 billion in it. People will collect the money, and they will help you draw strategy that will continue to fail, right? So that's a kind of business model that failed in terms of the operational model, the strategy. Some business model will fail because there is no streamlined target market customers. Like I said before, you cannot start a business yesterday and say you are a B2B2C. You are already failing. So that's another part where a business model can fail. And if you have a wrong revenue model, it will also fail. So today I have, there was a platform I did before I joined my current office, which I sold out to another company to keep running, right? We have microfinance banks subscribing to foreign software, right? I mean, I know one software called Mambu. That software is $350,000 on a yearly basis for subscription. In this time that there is no dollar in Nigeria, how will such companies pay their subscription fee? A company that was paying $350,000 multiplied by 150 naira, right? About 7, 8 years or 10 years ago. You can imagine what their operational cost is now, right? Paying for the same thing. So we felt that, look, there's a problem here to be solved. Can we have a system that will do the same thing, right? It will now be more affordable. Can it be like 10% of the cost of these guys? $30,000 per annum. It's an infrastructure, sweat it. Right? And can they pay us in Naira so that they don't go and look for FX? So you can imagine how you bring out the problems, then that is when you know that you have a problem to solve, right? Then you can now create your solution, okay? Then your revenue model can also change. Can I start working with these banks and charge them by the number of accounts or by the number of loans they book, so that we grow together with our organization? Why would you want a company, a microfinance bank that started yesterday, to pay you $100,000 when you know that the loan they will create between now and December, they may not even make $100,000? But when you change your billing model and you tell them that, look, I know you are young, I know I built my infrastructure, right? Come on this infrastructure, let's grow together. I will only charge you by the number of loans that you cycle out successfully. I won't even charge you on your bad loans. The ones you cycle out successfully, give me a certain percentage and use my platform. Those are the kind of, everything is a strategy together, from the problem to the solution to the value proposition to your unfair advantage. That means the kind of thing you have that cannot be easily copied, to your customer, to your key metrics, cost structure, revenue stream, channels. You just put everything together. And you ensure that they are all pointing towards solving that problem you have seen. It must not, none of these key metrics must deviate from the problem you have seen. that you want to solve. And that's how a practical, and you just have to write it out. It's not something you have, you draw a chart like this, put problem, list the problem. I am solving problem of effort. I am solving problem of affordability. I am solving problem of availability. You have to write, it has to be written. Against each of the problem, write the solution. My solution will be 10% of the cost of the current solutions they are using now. My solution will have additional features. I will add accounting package to my own solution, which the other solution does not have. That's your unfair advantage in quote. You must have a hedge. Write it. Who are my target customers? Microfinance bank. Then you now start listing them. Not that you just write, you list them. And please do not list the one that you know is already dying, because it is not part of your customer base anyway. So just take it out. Be realistic. If you have one customer, know that you have one customer. Don't go and, the way a fintech that is just starting, they've not even done any product. But in their presentation, they already put, we have 2 million microfinance bank in Nigeria. Meanwhile, you are counting the one in Ijesha, Ilesha, that only have 2 customers, Iyabeji and the other gentleman that they just give money to buy cutlass. And you are counting them. You are not being realistic. So you have to be clear your customer base and your targets. You have to come out clean, because you have to be sure of your target customer, available market. It has to be clear, right? And you put your key metrics. I will acquire 1, 2, 3 in 3 months, right? In 6 months, I will have 2. In next month, I will have 2. It's a gradual growth, right? We hear of fintech. We hear of Flutterwave. We hear of this. Some of these guys have even done businesses that has failed. It's the successful one we hear about, right? And you must learn how to fail quickly, fail fast, get out of it, move on again. Those are clean business modules that you can run. Thank you.
Thank you so very much, Mr. Babatunde. Damlola, the floor is yours. Thank you.
Yeah, I think in addition to his example, I remember the time when OLX was in our faces. I'm sure many of us would remember OLX and how they were just in our face with ads and everything. And we know the story of OLX today before it was eventually bought over by GG. So this is to add to Salvati's list of failed businesses. Even a business as big as OLX still failed then at that point, and before it was eventually bought over by OLX. I mean, like you said, the failure is not the problem. You now languishing in it, trying to patch things up, trying to doctor your reports, trying to look for investors to bring you out of a mess. Once you see that there's a failure inside, just get out of it and look for, like the elders said, they said there are many fishes in the ocean. I saw something on LinkedIn yesterday about somebody that was asking that so the fintechs today are banking the bank, that who is banking the unbanked. Then I saw somebody that attention the RIBI to the comment to say, I know a fintech that banks the unbanked. That's RIBI. And I remembered in my former place of work how RIBI started with cooperative onboarding members of cooperatives. So at that time they were like the bank of the cooperatives, because the cooperatives didn't really feel comfortable enough to bring their monies to the commercial banks, because they would typically say, oh, the bank's just going to keep telling us baby grammar, they will collect our money, we want to take our money out, they start telling us English, when we put 2 naira there, they'll take 50 kobo, they'll tell us it's the money for maintenance, what are you maintaining, they're using our money to buy ACs, things like that. So I was actually impressed that somebody somewhere has noted that this is what these people are doing and is thankful for that. I think I would also like to say this. The entire buzz of fintech in Nigeria, and just like that person said, is tilted towards the bank. It's like you're just you're trying to make me your cost. Look, you're trying to make your service is complementary to what I already have. So you want me to be a Progress Bank customer and also be a Kuda Bank customer on the side. So you want me to be a Sterling customer and also have one app on the side, but nobody's actually looking at people who do not even have access to financial services at all. That's what that person was talking about. I think that area should also be explored because there are so much of low-hanging fruit that can be harnessed in that area of people who are unbanked. The states that have access to financial services, I mean, full financial services in Nigeria are not up to 10, or should we just say about 15, and there are about 36 states in Nigeria. So any problem that anyone is going to solve in another 5-10 years time should include people up north, should include people in the south, include people in the southeast, people who are in the remote of the remote, and they'll be able to connect with you better because they are not going there to speak English to them like how I would speak to them. You would go there to speak the language that they understand, connect with them, and give them this product or this solution that you have, and they'll be able to trust you. And that's what agency banking is leveraging on today, trust. Because the guy down the road who is my uncle's brother, who is my uncle's friend, is the agent. I'm comfortable enough to meet him to say, help me transfer money. Sometimes even if the transfer fails, and I ask him to do it again. The reason why I'm asking him to do it again is because I know he's my brother's friend and they know what they do with my money. But you know how customers react when they come into the bank, and you tell them that we are going to treat their dispute in 7 working days, and they're just hitting the table. What do you mean by that? I want my money now. But they will typically not say that to the POS agent down the road because they know, well, okay, it's true, it will help me try. And as I'm passing, I'm going to the market, I'm saying, hey, uncle, have you helped me? He said, don't worry, they will do it. So any business model that would come in and clear the wave again should be something that will focus on the unbanked. People who do not have access to smartphones, who use feature phones and things like that. That customer segmentation is still untapped, and we have a lot of them in Nigeria today. And of course, at the end of the day, it's something that will in turn bring revenue for whatever fintech that would adopt that, because a lot of foreign investors would like to hear that, oh, you have developed a solution that you want to use to bank people in the northeast or in the northwest, or say people in the IDP camps, people who do not have full KYC, things like that. So I think that's it for me.
Yeah, thank you so very much, Damilola. A question, I'm trying to figure out question 2. Once I figure out question 2, then we'll take question 2. But there's another question I have, and it has to do with traction and partnerships. I know that a lot of companies fail because it's either they don't have the traction that they need, and at the same time, they may not be having the right partnerships. So I also know that you are, from your profile here, it says that you are more like a digital partnership manager. You are very skilled in the art of partnerships. So can you give us the ABC of partnerships? What should we look out for? Fintech companies look out for when trying to carve out partnerships with other brands or other individuals or corporates.
Okay, I think this would also take us back to where we started by saying that what problem are you trying to solve? You have identified your problem, then now need to identify potential partners. So partners being a large word now. The partners consist of other fintechs. The partners also consist of telcos, depending on your business model. The partners can also be the commercial banks or the PSBs. So you now need to identify in that problem that you have identified in my bucket. So let's say, for example, a bank is what is going to help me to scale and start up, or maybe a fintech. Okay, let's actually use a fintech, for example. Remember the example that Mr. Batili gave about a platform that we built recently that helps MFBs. That service is called infrastructure as a service. This allows you not to entirely own that infrastructure. It's like remember in decades past when we used to go to video clubs to borrow CDs there. Once you just borrow it and you finish watching the video or the home movie, you return it back. So it's like an on-demand service where you would only be charged and pay for what you have used. So let's say your platform is available only for 20 hours in a day. That's what they will bill you for. And like he even further said that what they're charging the MFBs are only for loans that are successfully booked, loans that are actively running and all of that. So this also saves you cost number one, using the infrastructure as a service model. So what you now need, unless, or then again, you have money. Maybe you have one angel investor somewhere that even when the idea was still very crude in your head, this person was ready to give you maybe a $2 million or a $1 million to start. Even though you're not going to return the money, the person just gives you. That's a different case. But in the case where you're just starting with your own funds or funds that you have put together with other co-founders, you need to identify how to get to market in the less effective way as possible, considering cost. If you go to infrastructure as a service model, this allows you to ride on platforms of people who are already in the market, who have infrastructures that are working, that you can attest to the success. You know how people will say today that, yes, I use Paystack for my payments, I use Flutterwave for my payments, I use Flutterwave to receive payments from other countries in Africa. So you can attest to the success of that platform. That's number one. Number two now is also need to find a partner that would help you maximize your fees. So as a fintech, you're also not an NGO. For whatever service that you have provided to your customers, you need to charge a fee. It is as little as a 2 naira fee. So imagine when you are partnered with imagine if you are partnered with someone that is charging you, say, 50 naira for using their platform for each transaction. So it means that from that 2 naira, you have to pop out 15 naira. You understand? So that means at that point, you're already running at a loss from the get-go. So you need to identify a partner that would allow you to, maximize your pricing for any service that you're providing. If you want to say for every service on my platform, it will not exceed 20 naira, then that means you must look for a partner that will give you a service that will not exceed 10 naira. But you also need to provide for any day that CBN can just come and say, oh, what are you doing there? Let me see what you're doing. Open your books up for me. Oh, I'm charging you 1 million naira. Where do you want to start raising the money from? Unless you want to go GoFundMe, things like that. So you also need to make room for savings for the company. You also need to make room for your overhead cost as well. So those are the things that you also need to work on. The third thing is, of course, you want to leverage on the brand that is already existing. Many people would prefer to just jump on Paystack today now because they know that once they tell the customers that their payment is being powered by Paystack or is being powered by, now people are seeing Paystack in the light of Stripe. They're telling them that Paystack is powering my payment. They're like, oh yeah, okay. This one, they know what they are doing, things like that. So those are the very key three things that has to be looked into in terms of partnership. Let me repeat again. The first thing is you to identify a partner that will help you maximize your pricing for the service. And of course, the second thing is to look for partners who have infrastructures that you can leverage on, such that when you're starting, you're not building from scratch. You're not looking for developers that will help you put 1 and 2 and 3 and 4 together. Yeah. Sorry?
All right. Thank you, Damilola. Thank you so much. I know that Mr. Babatunde might have maybe a flip side to this, or he might have his own views. So if you don't mind, sir, if you can just kindly share your own take in terms of how best to go around getting partnerships, the do's and the don'ts.
I think Damilola has touched virtually everything. Partnership is to give you hedge, is to give you speed. There is no point trying to do everything on your own. You are not going to scale far and you are not going to scale fast. But partnership helps you. Why do I need, if I want to do a piggy bank, for example, why do I need to build a wallet system on my own? Why don't I partner with probably a Providus or a Money Point that already have, a wallet system that I can ride on, like she said, a platform as a service, and they power me behind with what do I call it? With the wallet system. Okay, why I concentrate on the problem I want to solve. So if I'm solving problems of underbanks, for example, for farmers, I will be able to concentrate on, aggregating these farmers, educating these farmers, and bringing them closer to financial inclusion. Why, the platform as a service or whoever I'm partnering with are dealing with the technology issues. If I attempt to deal with both the technology and the field work at the same time, obviously, something that's supposed to take us 6 months may start taking us, a year or 2 years, because we will not be spending so much energy, while we can easily partner with, someone and part with a little fee, okay, for the services they are rendering. So, I mean, without partnership, you won't be able to solve serious problems, to be honest. And I mean, how to go about partnership, I mean, Damilola have said everything. I think she's a master in that regards. And you can't just do without partnership, to be honest. It's just the way to go. I mean, if I decide to build a core banking today, do I want to build acquiring transactions into that core banking? Do I want to build the same thing that NIPS has built, or what InterSwitch has built? How am I going to do that? How long will it take me? How much am I going to invest in doing that? Right. So, but partnership is the way to go. Well, you just have to find the right partnership. And of course, it has also to be this trusted partnership. Don't go and partner with somebody that the system is never stable. That's not partnership. You are just going to run into big trouble. Thank you.
Yeah, thank you so very much. We are almost coming to the end of today's session. I'll just quickly paraphrase question 2. Here it says fintech sector spread. With the advent of fintech in almost every sector, how does the law regulate them, even in unlikeliest places with a single law that's yet to be made? So I believe what this question really is about, maybe a question on regulation, maybe regulating the activities of fintechs in maybe underserved areas. Like now, we know that Lagos is like a commercial hub center, Abuja is trying, but if you go to a place like Zamfara, for example, I'm not trying to disparage any part of the country, but I wouldn't mention names anyways, but there are some parts of Nigeria where you might not even see so much of commercial activity, not to now start talking about fintech having a hold or a ground in any of those areas. So I think the question is, in those kinds of places, how does regulation, is it that regulation is absent there, or is regulation present? So I really don't know. The question wasn't really clear. So I don't know if we can make sense of what I've been able to make sense of. Then the last question, I'll take the 2 of them at once, has to do with, you talked so much about strategy, Mr. Babatunde, and knowing when to quit and knowing when to change strategy. Is like there's a very thin line between these 2 things. So in your own view, when is the best time? Because a lot of companies are quitting, a lot of fintechs are also quitting. People are checking out because they necessarily did not do the right thing. So when is the best time to quit? And is it better to change strategy rather than quitting?
Okay. There is a time to change strategy and there is a time to quit. When it's not working, or it's a wrong business, or you are not solving any problem. Sometimes we see something that seems like a problem, right? And if you don't dig deep well to list it out that this is a clear problem, and you go outside there to validate it, You may happen to be the only one having that problem, and you'll be solving your own problem, and you'll be the only customer. Right? At that point, if you are not solving a problem that has good customer base, then you should quit. Because there is no problem in the first instance. Right? You should just quit. But when you need to change strategy, it's very simple. And honestly, it is always clear. When you start something and you get a little traction and you plateau and you find out that you are not growing, right? You need to check the strategy at that point. And the honest truth is that your customer base will actually always change your strategy. Because when you launch a product, when you launch your MVP, you are built with the data you have gathered in the industry that this is the problem and this is what I feel the solution is, and you are validated, right? But the solution exists, but the process of executing that solution, right, may be different from the process the customers want. So let me give an example, and this can be clear to all of us. Today, let's assume I'm a bank, right? I run a bank and I decide to give people cards, right? Now, typically, any bank will want to give their customer cards because they need access to their funds outside the bank. So if you don't go into the bank, you can use your card on bank's ATM and have access to cash, right? But if your target customers, for example, are people in rural areas where there are no ATMs, right? As a bank, strategy of issuing card is correct. But the execution of how your customer use that card, which is now the end point, because customers must have access to their funds, right? Now that strategy, you must now change and say, okay, I think I need to launch agency banking around where my customers are so that they can use the card to have access to their funds, right? So I will, as a bank, I will execute a wrong strategy if I go to those areas and go and implant ATMs, because the first question is, how do you power it? How do you secure it? If there are places that there are no much infrastructure, there is no power infrastructure there, there is no security. So you already know that the strategy at that point is not to plant ATM, is to plant man ATM, which is agents in those places. So at that point, if your strategy before as a bank is to execute ATM implementation, then for those areas, you need to change strategy. So you know when to, because your customers will definitely dictate how they want the product to be executed for them. Don't forget that you already have a problem and you've created a solution. So the solution is right? It's just to scale. Now at that point, you may need to, in fact, for a fintech to keep scaling, your strategy has to be adjusted all of the times. Once you stop adjusting your strategy, you will definitely plateau. And if you don't take care, you will start coming down and the company will run down. And that is why fintech scale faster than banks, because their decisions and the rate at which they change strategy is very fast. They learn quickly. Even if the strategy is wrong, they change it again until they get the right one. And they can make decisions in 10, 5 minutes, 20 minutes, and they keep running. While in banks, because of the structure and because of the regulatory, so for example, before you do some things, you have to go to CBN and get approvals, right? And that will slow you down. And that's why you see fintech scaling, because the regulatory is not as stringent as the banks, and they can take decisions, they can change strategy and move on. So like I said, the summary is that you change strategy when you have the right solution to the right problem, but you keep changing strategy to keep scaling, right? Because customers' demand will keep changing, and you have to keep changing strategy to match it so that you can keep scaling. But you quit when either you have the wrong solution to the right problem, or you have no solution You can build a solution and it's still no solution to a problem, or you have a solution to no problem. So you just have solution to excitement. You know, there are solutions to excitement. No, I can do something cheaper than Uber. And you have not thought of it. I can gather all these yellow taxis and tell them that, meanwhile, the yellow taxis you want to gather, these are old men that cannot even operate smartphone. So how do you want to book them? So those are solutions to what we call excitement. You just have an excitement and you started building. Yeah, you can build. So that will never work, right? And at that point, you should just quit. It's no brainer. You should just leave it. So that is when to quit, and that is when to change strategy. In terms of question 2, to be honest, there is very few regulations around fintechs. Like we said before, they are not as regulated as the banks, right? So a lot of things happens, and a lot of fintechs get away with some things, right? Especially if the fintech is not, how do I put it, is not taking deposits. If you are not taking money from customers and you are keeping it as deposits, right? If you are just facilitating transactions, maybe you gather farmers together, you tell them that they can all come together, rent a tractor and use it to clear hectares of land and do their planting and stuff, right? Maybe farm, there are just so many solutions that as long as you are not taking deposits, you are less regulated, right? And to be honest, I don't want to say the regulators are, let me put it this way, the regulators are a bit behind fintechs. So sometimes they first of all allow you to execute, they see what you are executing, and when they find out that, oh, there are some risk in what this person is doing, then they come after you and tell you that, look, what are you doing there, gentleman? You need to stop this business, or you need to put 1, 2, 3, 4 things in place to mitigate the risk we are seeing. But that, like banks, where before you execute a product, you get approval, it is not the same thing in fintech. So I can tell you that it is not as regulated as, the banks that we have. So the regulations are not so there. They are not there. So in fact, in some space, there is no single law. It is until when something goes wrong and somebody reports, then they come and now put some checks around that kind of, who is regulating fintech in real estate today? No one. No one, right? Who is regulating fintechs in sharing, where somebody is gathering people and giving them fertilizers and registering their names and ask them to be contributing money and giving them the loans from the money they contribute? We don't even know that there are some guys doing such there, right? So of course, there are some fintech businesses that today there are no, laws guiding them, to be honest. It is when something goes wrong that it is reported, then you see regulators coming into it, and it happens everywhere, right? You cannot regulate what you don't know that it is happening, or what you don't have so much ideas around it. So you learn from what is happening, then you regulate it. And that's how innovation can grow. You don't kill the innovation before, let the innovation start, right? Let it start striving. Let's see what the problems that is being solved. Then if there are problems in terms of risk, then government can come and put some risk framework and say, please go and do this, get this done, put this in place, and continue your business. Yeah.
All right. I don't know if you're done, sir. Thank you so very much for your contribution. We'll be having the final contribution from Damilola on the same questions before we round up. Thank you, ma'am.
So, like you said, there's no particular regulation per se in terms of how fintech should do business, because really how do fintech start? It's not like there's a law somewhere that says that you must lay 2 inches of block on each other and put cement in between. People from the comfort of their rooms, their university hostels, just put heads together and say, boom, we just discovered something. Let's make this happen. So the government cannot stop our heads from working or our minds from thinking. So then when it comes to execution, really, as long as how they say it on the street, as long as nothing's spoiled, you know, as long as money is not missing anywhere, as long as nobody has written to consumer protection, as long as they will just leave you to do your thing. But the moment one person reports and goes to Insta blog and say, oh, this, that, and everybody is tweeting, sharing, reposting, posting on WhatsApp, making a fun of it, and it gets to their knowledge. Then they begin to say, what is this thing that is trending today? Let us have a look at it. So by the time they put the halogen lamp on your business, then that's where the problem begins. And they begin to ask you to do this, to bring this, bring that, then you begin to stutter when you don't have this in place. So, I mean, really, as long as nothing's spoiled, so under this nothing's spoiled, as long as customers' data is not breached, as long as their security is not breached, as long as no money is missing somewhere, as long as whatever investment that you have promised them, you are giving them at the right time, it's not short of a day or short of any percentage, short of any kobo, we'll be friends. It's just also typical with two friends that are doing business together. As long as one person is not shortchanging the other, everybody will be moving well. Until one person decides to be smart and say, this year I want to move to Banana Island, and begins to circumvent the process, take monies aside, just doing shady things. And the other party becomes, aggrieved. And before you know it, that's when we hear it on the internet. So as long as nothing's spoiled in quotes, most times the regulator would not have business with you because they actually have a lot to do with, to be very fair. Customers' demands are gradually changing, especially with the banks. Before now, I remember that there used to be a monthly charge of 15 naira on every customer that has a debit card in Nigeria. Today it has been taken down. It's now a quarterly fee. Before you know it, that fee will gradually thin out. And the reason why that change is happening is because people are complaining and saying, you are collecting 15 naira from me. There are some months I don't even use the card. What's your problem? Give me my 15 naira. And all of these grievances. So they too have to always go back to the drawing board. Look at what is obtainable. Look at the inflation. Look at the customer needs. Does this satisfy their financial problems? And all of that. So they have a lot on their hands to now add two young boys somewhere in Babcock University or two young guys somewhere in Ikorodu thinking about how to onboard farmers. No. I'm not sure they have that kind of time in their hands. So as long as nothing is missing and nothing is broken, everybody will just remain friends. But like what they said, who is regulating fintech in real estate? Nobody. Until when one person now sells the same set of units to 100 people, one property, sell it to 100 different people, and they just arrive and descend at the venue, and they are pouncing on you. Is on social media, somebody has recorded the video and it goes out, and Nigerian mortgage, maybe the CEO of Nigerian Mortgage Bank, or maybe the MD is already thinking, in this our Lagos, somebody is doing this, Lagos State, the lands and revenue and everybody, everything, where did this happen? So before you know it, it becomes a national problem, then that person is in soup. So usually, as long as nothing is broken and nothing is faulty, nobody has business with you. Thank you.
Okay, thank you very much, Mrs. Damilola. I think I have a personal question. I don't know if we still have time to answer it. So it's about this Ponzi scheme that was very rampant the other time, this MMM. I don't know if you've heard of it that time it was out. So this MMM now, when it came, the thing was like doubling people's money for them that time before it finally crashed. So after that time, I think I used PalmPay recently. So there's a day that the PalmPay network server went down for almost 48 hours. So when I came back home, my roommate was telling me that the PalmPay, they've run with our money like the way MMM did, stuff like that. And I was that scared. I said, is this not enough reasons for the regulatory bodies to like have a very strict rule for all these fintech companies? That's my question. Please, Mr. Babatunde should go first in answering that.
The lights club. To be honest, I think I can say I remember the MMM. Everybody was collecting money. The week I put my money, boom, that was when they disappeared. So I lost money too. So these things, like we said, Damilola has killed it until nothing spoiled. I mean, God, like you said, governments have too many things in their hands. These are guys fight anti-terrorism money coming into the country. These are guys fast fighting anti-money laundering. These are guys fighting corruption. Everything in the financial sector, to be honest, there are just too many things in their hands. Now, until such business grows into millions of customers, that is when they start hearing that there is something going on here. Or until you and I report to consumer protection, like she said, or report to CBN, that is when they hear that things are going around, right? I mean, she had said it. 2 boys in Babcock decide to solve a problem. Until that problem until that solution is being adopted by millions of people, right? Government will not hear about it or something goes wrong. So there is no, for them to start regulating what they don't know about or what has not gone wrong, but solving a problem. At least today they have started. For you to participate and be in partnership with any bank, you must have a CBN license. So they started licensing most fintechs. If you are doing anything serious, you will be licensed. Otherwise, if you are caught without any license, in fact, no bank will even deal with you without any license. Even for Paystack, if you want to acquire payment, they will ask you to upload your CAC documents. They will ask you to, put your KYC about your company, and they don't approve you the same day. What they do is that they go behind, check the company if it's real, and they now do the approval, right? So they are using the big entities, the big banks, the big fintechs, right, like Flutter and the likes, to regulate the smaller ones coming. So more or less, like there's small regulation somewhere, but it's not directly, like Damilola said. And these guys have so many things in their hands, to be honest. So they are trying, like, until something goes wrong and somebody shout, right, they get to know about it, then they come into it. But they are also doing, they are doing their best, to be honest. Thank you.
I don't know if you
Thank you
have
so very
any
much.
comment on that.
Damilola has
I'll just take this in 60 seconds. So, like we had said earlier and time again, as long as nothing spoils, the government doesn't have business with you. They are right here battling anti-money laundering, like Babatunde said. They are battling suspicious transactions. So they are battling inflation, so many things. So if you notice, there was a time before the MMM went bad, the central bank governor came and said that they do not have any affiliation or any business with this scheme. You do it at your own risk. And the same thing has happened now with cryptocurrency payments. You will notice that the central bank has, explicitly said that they don't have any business with this thing. If you do it at your own risk. So if anything happens so let's say, if you take any of the big players, I don't want to mention, if you take any of the big players in that ecosystem now, and they cut away people's money, you cannot come to CBN office and say, oh, shout, oh, they are taking my money, because they had already warned you earlier that don't do business with them. It's not allowed. And they also want the banks not to also do business with them. So if anything happens to your money, it's at your own loss. Get it?
Thank you very much, man. Thank you very much, Mr. Babatunde.
Yeah.
Mr.
So
Joseph,
very quickly, I just want to say a very big thank you to our mentees. I would also like to thank all our mentees here who started from the beginning and waited till the end. Also, I'd like to appreciate very profoundly Mr. Babatunde and Damilola for taking out time to bless us with your wealth of knowledge. We're extremely grateful, and I'm sure that all the mentees have taken one thing or the other from today's session. I would also advise that we can go back. The videos, the session is recorded. I would appeal to our mentees to go back, listen to this comments over and over again. You may have thought that you got something, but on a second listen, you might actually find out that there's so much more that you can actually pick out from today's session. So a big thank you from all our mentors. Husseini, thank you as well for standing in when the network, kind of try to make a mess of things on this end. So thank you, everyone. Our convener, Jelena Imam, I'm sure she sends her regards. She's also on, she's on the call as well. So I'll be saying goodbye from this end, and thank you once more.
Thank you, Mr. Babatunde. Thank you, Damilola. Thank you so much for today. We've had a corrosive discussion, so enlightening, and I was just jotting throughout because I learned a lot. Thank you so much, everyone, and thank you, Hussein. Have a lovely day. Enjoy yourselves. Bye.
Bye.